I'm Emily Chang, and this is Bloomberg Technology. Coming up, U.S. stocks smash records across the board to close the week with tech shares leading the charge. We have the latest. Plus, a Bloomberg scoop, Dell weighs options with an IPO on the table. Why the man behind one of the largest leveraged buyouts in tech history is rethinking the company's future less than 5 years after going private. And the rising uncertainty over Facebook's newsfeed pivot. The San Francisco Chronicle's editor-in-chief shares her disapproval for Zuckerberg's new fix and the potential impacts on ad revenue and digital publishing. But first, to our lead. U.S. stocks hitting a new all-time high. The market is once again rallying on strong earnings results, with tech shares leading the way. Friday's performance helped push the markets higher for the week, with the S&P 500 turning in its fourth week of gains. For more, let's bring in our Bloomberg News stocks reporter, Abigail Doolittle in New York, and here in San Francisco, our Bloomberg editor-at-large, Corey Johnson. So, Corey, what are the highlights you'd pull out here?
Well, I think, the Intel's results yesterday really driving the markets in a big way, and I think that the rise in Intel shares, and we sat here and talked about it last night, but this big move in the data center business, look, everything we've been talking about for years about this move to the cloud is really starting to show up in the results of Intel. And the big growth we've seen in Microsoft Azure, Amazon Web Services, Rackspace, and so on in the cloud area is what's driving Intel, and Intel seems to be driving the entire market. At least today, it's certainly a 10% gainer, and really a big move for the rest of all of technology.
Meantime, Apple not having a great week. Perhaps it's worst in several months. There was a BTIG report warning about sales in the spring, saying that Apple may guide revenues lower for the current quarter. Abigail, what's your read on this?
Well, we've been hearing reports along these lines quite a bit recently. Actually, even last year, there were some analysts saying that the demand for the iPhone 10 was not going to be as strong as investors would like, and that could weigh on the March quarter. But earlier this week, Bernstein saying that March quarter is probably too high relative to consensus of the number of iPhone units to be shipped. JP Morgan actually lowered estimates on a couple of the Apple suppliers. So today, BTIG saying that street estimates for sales for that March quarter are too high. And if I look into the Bloomberg, the street is looking for $67.7 billion. That represents 28% year-over-year growth relative to the December quarter of $86.7 billion. That's 11% year-over-year growth. So really big growth there. So if the units come in weaker than expected, that could really weigh. Technically, the shares look a little bit vulnerable. They are in a range below the 50-day moving average, suggesting that there could be some sort of a bearish surprise ahead next week when the company does report and gives the guidance for that March quarter.
Corey, this BTIG analyst, Walter Piecyk, he points out that people are just holding on to their iPhones longer, and that is not good for Apple.
He's also got a buy rating on the stock. So, we are in the final days before the company reports the quarter, and the analysts who've got recommendations on the stock would love to see the stock pop on the recommendation. I'm not saying Walter's playing games with this, but if an analyst were to lower their numbers and keep their rating on the company will actually see a lower estimate to beat, and the bar quite literally gets lower for them. And so, we'll see what the numbers are like. But what Abigail's saying is that this is a business that is one of the biggest in the history of the world and still growing at a double-digit rate, and that's something that's pretty impressive by my book.
Meantime, Abigail, Bitcoin and other cryptocurrencies falling after one of Japan's largest cryptocurrency exchanges said that about 400 million tokens were lost. Not good news. Walk us through what happened in the crypto space.
Well, it's pretty stunning what's happening in the crypto space, and especially with Bitcoin over the last 2 weeks, trading closer to $10,000 per Bitcoin relative to the all-time high just last month of $19,500 per Bitcoin. And, I was speaking to Mike O'Rourke, chief strategist overall at Jones Trading, and he was saying there aren't any fundamentals for Bitcoin, that it's really a picture of pure demand and supply, investors hoping to make money there. He thinks that there's bubble-like conditions. And frankly, Emily, it's a great time to use the technicals, because the technicals, that is a reading on demand and supply. If we hop into the Bloomberg and take a look at #BTV9416, this chart suggests that we could see Bitcoin easily dropped back down toward 1,000. So if I walk us through it, we see a beautiful uptrend where Bitcoin in 2017 just went higher, higher, higher in relation to its 50-day moving average, mainly above that 50-day moving average, telling us the buyers are in control. But the recent volatility from that all-time high to the recent lows, that congestion, that's a battle between the buyers and the sellers, the confusion, the uncertainty. What's next? Right now, the sellers are taking control. That congestion is breaking to the downside. We could see a measured move again back down toward $1,000 per Bitcoin. This chart certainly suggests more uncertainty and volatility ahead, probably to the bearish side, Emily.
Corey, tell us a little bit more about what happens in Japan specifically.
So it's an interesting story here. I mean, the story of losing coin is not a new one. Whether it's an exchange that's lost some coin or some thefts at an exchange, or even people throwing away hard drives or losing the keys that give them access to these things. This is a particular currency called the NEM, which I had never heard of before today. I'm surprised there was that much value.
But there was a lot of it, $400 million
and it had
worth.
some value. The fact there was a lot is not a big deal. The fact that it had some value was a little bit of a surprise to me. But I think that it shows some of the risks there, obviously, in some of the currencies. It's also interesting that the rest of the more well-known currencies, if that's not an oxymoron, the currencies like Ethereum, Bitcoin, Ripple actually up for the day, one of the only ones in the crypto world. Believe it or not, I was reading about IRS tax treatment for cryptocurrency losses this morning, because what else would you do at 5 in the morning? But that's what I was doing, and it's interesting. Cryptocurrency is, if you lose a cryptocurrency, it is valued at the purchase price. So in this situation, if an investor had bought this thing, if you bought a Ripple XRP coin at 1 cent and somehow lost the hard drive that had it, when it's now at $1.30 or so, you would lose. It would be able to write off for the IRS only your actual cost basis. So the people that have this loss will also have a massive tax loss from this, or in that they won't ever be able to show the gains that they had if they're never able to recover this stuff. It's a really interesting and kind of horrible problem for those people who may have lost that investment.
Indeed. Abigail, we all have a busy week ahead, including you, Apple, Amazon, and Facebook reporting earnings. What do you have your eyes on?
Well, certainly all of those earnings reports, Apple in particular, because again, there are reasons to think that this stock could have some sort of a bearish break on that March outlook. I also want to point out Twitter, though. Twitter today had its best day of the year, up more than 9% on another round of takeover speculation. Lots of trading desks talking about the idea that Salesforce.com could buy Twitter. Of course, Bloomberg LT does have a breaking news network on Twitter, TikTok. I just want to throw that in there. But I also want to point out the idea that Bloomberg News is saying that Twitter, the volume is at a 3-month high. That may suggest perhaps, of course, Monday, M&A Monday, maybe there will be some sort of deal activity on Monday. Whether or not that happens, again, it's all speculative, but certainly worth pointing out with Twitter up more than 9% on the day. Again, Emily, its best day of the year, and I think it's the first up day in 9 days, too. So some bullish action there on Twitter.
Is that chatter just chatter or something more? We're going to talk about that a little bit later in the show. Abigail Doolittle, our stocks reporter in New York. Corey Johnson, our editor-at-large right here. Thank you both. A story we are watching, JD.com is preparing for its U.S. debut. It is seeking to bankroll a logistics buildup and may set up a facility in L.A. It's in final stage talks to sell 15% of its logistics arm to Tencent and other investors in an early fundraising round. This is a precursor to a logistics IPO in China or Hong Kong in about 3 years, according to founder Richard Liu. Coming up, Intel turning in earnings that beat estimates and an upbeat forecast. We'll hear from Intel CFO Bob Swan next. And Bloomberg Tech is live streaming on Twitter. Check us out at Technology, weekdays 5 p.m. in New York, 2 p.m. in San Francisco. This is Bloomberg. Intel surged in Friday's session after earnings beat estimates, and the company's upbeat forecast signaled demand will persist despite the headaches caused by chip flaws. Our Bloomberg editor-at-large, Corey Johnson, caught up with Intel CFO Bob Swan for insights on the results.
We feel great about the performance overall, and in particular the data center business, that growth accelerated off a strong third quarter. Fundamentally, there's strength across the board. Our cloud business was up 35%. Our comms business was up 16%, and our enterprise business was up 11%. And as you know, enterprise has been relatively slow growth or negative growth for a while, but in a strong seasonal quarter, outstanding performance in enterprise. So we feel great about how we closed, and we're excited about 2018.
Which business is growing faster, the enterprise business or the server business in the sort of the cloud farms of Amazon Web Services, Microsoft Azure, Google Cloud, Rackspace, you name it?
Well, the good news is they're all growing strong in the fourth quarter. But again, the continuation of cloud growth in the mid-30s and the continuation of market share gains in the comms and infrastructure area that's been relatively slow growth in the market. But for us, it's been strong growth for us because we continue to gain share as the networks and the comms infrastructure continues to upgrade. We've been a beneficiary of that upgrade. And in addition to that,
no, go ahead.
Corey, I was just going to say, I talk a little bit about where we've sold the product, but how we sold the product is important as well. Unit volume was up 8%. ASPs were up 10%. So we're seeing customers continue to buy the high performance products, driving ASPs up. And then third, we've talked about expanding our served market in the data center world. In other words, selling more than just CPUs into the data center environment, but sell other adjacent products. And the adjacent product growth in the quarter was up 35%.
Well, and to that, as you fix your IFP, I'll mumble and stammer on and give you a break.
Thank you.
So it's an old trick that we do. I'm interested also, that I was talking to Ian King, our terrific semiconductor here at Bloomberg News. He did a radio segment with me yesterday, and he was just talking about the cost of these chips. And I was surprised. I didn't realize that the price of the chips going into these server farms is extraordinarily high, $12,000, $13,000 or so. And you're saying that that price continues to rise.
Well, it's a function of performance,
right.
Corey, and as we continue to deliver higher and higher performance, that makes the economics of the service that the cloud service providers offer, it really drives their economics. So in the capabilities that we offer, really, we call it moving up the stack or buying the real high performance chips that improve their economic infrastructure.
I also would have thought that as you moved into more Internet of Things business, also terrific growth there, I think 20% there as well, and chips that are more sort of part of everyday devices, that gross margins be coming down. We're seeing exactly the opposite, 64% gross margins. Again, just a terrific number from Intel.
Yeah, I mean, we've talked over the time about expanding our overall served market, and obviously we have very high gross margins in our historical CPU business, but as we expand to be more than just Intel inside the PC and Intel inside the data center, we also want to be Intel inside everything and have more Intel products going to each one of those verticals. IoT is a classic example of that. The business is a $3.2 billion business. It grew 20% in 2017, and it continues to grow as we proliferate the capabilities that we have, not only in the cloud, but around the edge as well.
What do you know about what some of your customers are doing in terms of their own design? It seems fairly amazing that customers could think about designing their own chips, and yet you've got Apple, Facebook, Google, maybe Amazon looking at designing their own chips in some way, and I wonder what you know about those efforts.
Well, we know about the relative importance of chips in terms of their infrastructure, and we know that they absolutely want us to continue to innovate and deliver more and more power, more and more performance. So the criticality is extremely important for all of our customers. What they want from us is to continue to deliver higher performance, and that's what we're focused on. And as long as we continue to do what we've been doing, we're confident that we will continue to lead the industry and deliver the products that our customers need at the performance levels that they need and ask for.
Let me ask you finally. So 17 years ago, I was right down the street here at a magazine called The Industry Standard. The stock market was going crazy. The future seemed indeed quite bright for the internet. Your stock is now at a 17 high level you had not seen since that era of January 2001. So I don't know, the stock price is mildly interesting to me, but what it portends for the future of technology is much more interesting to me. I wonder what if you think we're finally realizing some of those ideas of the internet from 17 years ago.
I mean, the transformation of the industry overall has just been fascinating. And then in terms of how we've been trying to take our capabilities and expand where it is we offer them. I mean, obviously, back in 1999, Intel Inside was about the PC. Today, Intel Inside is about the PC. It's about the data center. It's about around the edge. It's about Intel Inside autonomous vehicles. So I think the role that technology plays becomes more and more important. And therefore, the investments that we've been making is to ensure that we're well positioned to participate and lead and grow as technology plays a bigger and bigger role.
That was Intel CFO Bob Swan speaking with our editor-at-large, Corey Johnson. Coming up, a Bloomberg scoop, billionaire Michael Dell is reconsidering the future direction of his company. We'll discuss the next steps for Dell. And if you have a Bloomberg terminal, check out TV Go. You can watch us online, click on our charts and graphics, and interact with us directly over the IB. Just go to TV Go on your terminal, and you can also contact us on Twitter. I'm at Emily Chang TV. Check out TikTok by Bloomberg as well, the first 24-hour global news network streaming live on Twitter. This is Bloomberg. Google has until Sunday to report how it's complying with the EU's antitrust order. The company paid $3 billion in penalties last year for antitrust practices. Rivals say the search engine's offer to auction ad space doesn't work because Google wins most of the spots. Google must submit a report on how it has given smaller competitors a fairer deal. 4 years after one of the largest leveraged buyouts in tech history, Dell is considering going public again. Michael Dell spoke about the benefits of running a private company with Bloomberg's editor-at-large, Eric Schatzker, back in 2016.
As a privately controlled company, your time horizon is very different. And so you start, you reimagine your business. You think about your business in years and decades. And it allows you to reconceptualize how you're investing and what the real priorities are.
We're joined now by our Bloomberg Deals and IPO reporter, Alex Barinka. So what do we know?
We know that Michael Dell's previous stance that being private was better is potentially changing. So right now, Dell is considering whether to list, do some kind of other strategic move with potentially its VMware stake, or nothing at all. But the key thing is this is the first time they're considering options for getting public again, and that will be discussed and decided on at a board meeting later this month. So this is only, as you said, a few years after the LBO, a few years after Dell bought EMC, and what's still the biggest closed tech deal ever, that $67 billion takeover of EMC. So this company is looking at options, and the reasons are a bit interesting.
I interviewed Michael Dell at the end of last year, and he sort of reiterated what he told Eric there. We're happy with the way things are. They do have about $46 billion in debt. Is this a way to unload that?
That is what folks are pointing to in terms of rationale. If you look at kind of their debt servicing load, that's a big chunk there. You have about $3 billion coming due this year, about $4.5 billion in debt coming due next year, and you have a change in the interest rate deduction rules that would potentially leave Dell not able to deduct as much interest, so that cost would potentially go up. So yes, being private, being able to invest in the business is great, but if all all that cash has to go towards servicing your debt loads, servicing your capital structure, then you potentially need revenue from elsewhere. And I will say, an IPO is not the only thing on the table for Dell Corporate. Pivotal, another Dell company, they're looking at potentially taking that public. That's been on the table as well. That's a $5 to $7 billion company. So a lot of things on the table right now. But bottom line is, it seems like Dell is considering different options for how it can bring in some extra cash without having to raise more debt.
And how does VMware play into this?
So you remember, VMware is the company that Dell has a large stake in. So the thing that it could possibly consider, not according to our sources, but if you look at the landscape, potentially there's a way for Dell to get public via VMware. That's something that folks on the street are talking about after we broke this news last night. So that's all kind of floating around here. We had one source float the idea that Dell would buy that whole VMware stake. That seems less likely if you're listening to the analysts at Citi, who came out with a note saying that today. But these are, as Dell kind of looks through its corporate structure, and as Silver Lake, remember the private equity firm, has a large stake in Dell as a private company, starts to look through its corporate structure, perhaps it's time for an exit to realize some of these returns, not just on paper.
So what would the timing of this be, and how would it fit into the IPO pipeline that I know you've got down pat?
So we don't have exact timing for Dell yet. Again, decision by the end of this month, but you would think that if this bull market is getting a bit stale, they want to go out before there's some kind of turn in equities. Stocks have done really well. New stocks have done really well, especially in the enterprise tech space. If you look at the class of 2017, they're up about 30%. Those new companies who listed last year. 2016, they're up about 70%. So if you're talking about investor interest for new stocks, enterprise tech has fared pretty well. The question will continue to be for new potential equity investors, is this debt load big enough for investors to swallow?
All right, Alex Barinka, our deals reporter, thanks so much for breaking it all down. Coming up, Mark Zuckerberg says he is on a mission to fix Facebook, and one news publisher isn't happy about what he has planned. That is next. This is Bloomberg. Bloomberg Technology, I'm Emily Chang. It was just a little over 2 weeks ago that Facebook sent shockwaves through the news industry, announcing changes to its newsfeed algorithm. Less news and business updates, and more posts from friends and family. Now, this comes at a time when 2/3 of Americans report getting some of their news from social media, and one person not happy with the newsfeed change is Audrey Cooper, the editor-in-chief of the San Francisco Chronicle, who recently penned an op-ed to Facebook CEO Mark Zuckerberg saying, "You are making the country's absolutism worse and abdicating your responsibility to improve public discourse. Facebook likes to say it's a creative company. Surely there is a more creative solution." I'd like to welcome Audrey Cooper now. Also with us in New York, our Bloomberg Business Week columnist Max Chafkin, who's written extensively about Facebook. So Audrey, you didn't hold back here, or maybe you did, but it certainly sounds like you did.
I felt I was holding back at the time, but maybe not.
So look, Facebook would say we're only changing the percentage of news in the feed from 5% to 4%. How big a difference is that really for a publisher like you?
Well, it can be, for us, over the last year, we've seen our Facebook referral traffic go down by 60%. So this has been a long time coming. sfchronicle.com is monetized through subscriptions, so we don't really try to get a huge amount of traffic. We're really going after our subscribers. But what I'm really worried about are smaller publishers and TV stations. I heard from a TV station recently that said a majority of their traffic to their website had been coming from Facebook. You think about that, you think about your small neighborhood blogger that relies entirely on that kind of advertising from traffic, and then you've got a real problem.
You talk about how, being beholden to Facebook for any publication has been like a roller coaster over the last several years. It's like when they say jump, you say how high. What are you really so upset about here?
I mean, I'm upset about two things. The first is the capricious nature by which Facebook, in my opinion, is taking their responsibility to provide news. They grew this company by going after publishers and saying, put your stuff here, teaching us how to do it, trying to get people to spend more time on Facebook. Then they served 140 million Americans fake news during the election cycle, and now it's, this news thing is too hard, we're going to give up. But they've already changed how Americans consume news online, and I think they have a responsibility for that.
Now, Max, Facebook is trying to help fake news, the fake news problem, by doing this. What is the optimistic view on here for Facebook?
So if they get this right, the optimistic view is they're able to cut out from that, going from 5 to 4%, you're able to cut out all the bad stuff. So maybe the Russian propaganda, the news sites that are relying on sort of dubious sourcing or just, making stuff up. But I think to Audrey's point, the problem here is that Facebook's interests are not really aligned with the interests of publishers. Publishers care about their brand. That is, they want readers to know who they are. And as far as Facebook is concerned, no matter what the algorithm is, no matter what Mark Zuckerberg says, what Facebook wants is for people to get information from Facebook, for them to not think about brand as much as thinking about, here's this thing that all my friends are telling me, links to interesting things. So that kind of runs counter to everything that normal media companies have done for pretty much the history of business.
Meantime, Facebook is also apologizing for certain things. This from Facebook earlier in a blog post. From the Arab Spring to robust elections around the globe, social media seemed like a positive. The last U.S. presidential campaign changed that with foreign interference that Facebook should have been quicker to identify, to the rise of fake news and echo chambers. I mean, they're admitting that Facebook can hurt democracy in some cases. Is that enough for you?
No, well, it would be a start if they were doing something about it, but this change is actually going to make things so much worse, and it's bizarre to me that they don't seem to get that or that they're obfuscating it. Look, there are people who signed up to follow the San Francisco Chronicle on Facebook. They opted in to us sending them news. Now what Facebook is saying is, no matter what you wanted, we think it's bad for you, the news makes you cranky, and we're going to suppress it. So they're taking away the option for these users who wanted to get their news that way.
Max, what's your response to that? I mean, because Facebook's argument would be, this could help some publications, if you will.
Yeah, I think that the cynical read on it is that basically for a long time, Facebook has had this problem where people are not sharing as much. Facebook wants you not just to consume Facebook passively, but to share stuff. That's part of what makes Facebook valuable both to advertisers and to its network. So one sort of cynical take on this would be Facebook is sort of doing something that's actually good for its business and kind of painting it as if it's doing something good for the world. Like, this is something that Facebook might have done independent of this whole conversation about fake news and Facebook's place in the world. And the other sort of thing here that we need to think about is just that Facebook kind of keeps correcting itself. So Mark Zuckerberg at the beginning of the year sort of resolved to sort of figure out Facebook's place in the world, to make sure time spent on Facebook is well spent. But he sort of did that last year, and the company has really struggled to figure out how to police this stuff. And I don't know that it's clear to anybody inside of Facebook and certainly not outside of Facebook how they can do this, how they can balance both the sort of social needs with the needs of their business. The stock has continued to perform well after like a little dip immediately after Mark Zuckerberg said that users would be spending a little less time on the platform. So investors think this is good for business. The question is, what does it mean for the world?
On the one hand, there's concern, or perhaps Facebook is concerned people aren't sharing enough. On the other, there's all of this talk about Facebook being more addictive than ever. You have Roger McNamee on this long march about the addiction problem. You have Mark Benioff, Audrey, the CEO of Salesforce, saying Facebook should be compared to cigarettes and regulated like big tobacco.
Yeah, I'm starting to agree with Mark Benioff on this side. Look, there's a reason why there's so much cat videos and fake news on the internet, because that's what people like to share. That's the addictive stuff. When you take away the actual news from actual publishers, this is only going to get worse. The echo chamber is going to get worse. The fake news problem is going to get worse. I really don't see where Facebook thinks that there's a win in this.
What do you make of Murdoch saying Facebook should pay publishers to carry the news?
Look, I'm not going to turn down a free check. That's certainly the case. But look, we're trying to get news to people where they're at, and people were on Facebook. That only makes sense. And we have a responsibility to help monetize our businesses in a different way too. But when you're constantly and capriciously changing the algorithm based on whatever whim you have, then we're just what do you expect us to do at that point?
All right, Audrey Cooper, San Francisco Chronicle editor-in-chief. Thank you. Max Shafkin of Bloomberg Businessweek. Thank you, as always. Now to a story we are watching. Google is pushing into the social network space. The company testing a tool called Bulletin that will allow anyone to publish local news stories and events. Google has described Bulletin to be an app for telling stories and to post photos and videos from your phone. The tech giant will take on the competition of others already in the space, like Small Town Print, online publishers, or Patch. Coming up, after 7 years of planning and construction, Amazon will unveil its Spheres space in Seattle. And earlier this week, Bloomberg got a sneak peek. We'll give you all the details next. And this week on Bloomberg Television, this weekend, we're bringing you our best interviews from the week, including our conversation with Nest co-founder Tony Fadell. He helped create the iPhone at Apple, and now we talk to him about rising concerns about tech addiction. Tune in this Saturday for the best of Bloomberg Tech. This is Bloomberg. SoFi has acquired the engineering and product teams of mortgage startup Clara Lending. This bolsters the financial technology company's offerings beyond student loan refinancing. SoFi confirmed the acquisition on Friday and said taking on the Clara teams allows it to immediately ramp up our technical capabilities. On Monday, Amazon will open 3 plant-filled spheres that are the architectural centerpieces of its $4 billion headquarters in downtown Seattle. The spheres hold 40,000 plants from around the world that flourish in tropical climates. It's a place Amazon employees will be able to enjoy as they wind down from emails, meetings, and phone calls. Bloomberg Tech Spencer Soper got a sneak peek of the spheres earlier this week. He joins us now. So, Spencer, how does it feel to walk through one of these things?
Well, the first thing you notice is a big difference in the humidity. So I went in, it was kind of a cool rainy day in downtown Seattle, and you just feel this kind of blast like you're walking into a greenhouse. But it's not as hot as a greenhouse. The temperature will range from about 70 to 75 during the day. And that is the first thing you notice is the humidity. It's about 60% compared to maybe 30% for a typical office setting. And then it's just very green and lush. You know, you walk around, you feel like you're in Swiss Family Robinson, or, you know, if there's like Star Wars fans, like the forest moon of Endor. You know, there's suspension bridges going around trees. There's, you know, meeting spaces and lofts, so you feel like you're meeting in the trees. And it's really just definitely a big difference from a desk in a cubicle.
Right, and Amazon, of course, is in the center of Seattle, unlike Facebook and Google and Apple, which are all, you know, these sprawling campuses in suburbia. Talk to us about the logistical challenges Amazon had in, you know, trying to put a rainforest in the middle of a city headquarters.
Yeah, the big thing was that they had to build a building that on the day it opened had this very mature landscape. And so the biggest challenge was they have kind of as a centerpiece in the spheres is what's nicknamed Ruby. It's a 55-foot tall tree. And so they didn't want small trees on opening day. They wanted a big mature tree. And they had to actually transport Ruby, this tall tree, from a Southern California tree farm all the way up to Seattle, and then hoist it via crane and actually take part of the sphere apart because the spheres were already built and they couldn't get it in through the door. So they had to take part of it apart, drop the tree through the top, and then reseal everything back up again.
So, you know, how do they expect to use this building?
Well, it is largely a place for people to recharge and refresh. They say it can handle about 800 people at a time, and they're going to monitor access to make sure no one's, you know, really hogging their time in there. But it is Wi-Fi accessible, so you could go in there and work. You could go in there to interview a candidate. That's definitely one thing that they'd like to do is they see it as projecting the image of a forward-thinking company. So if you're here applying and thinking of taking a job, this could be you know, an interview in the spheres might be something that you know, convinces you Amazon's the place for you to work.
All right, Spencer Soper there for us covering Amazon in Seattle. Thank you, Spencer. Coming up, from Twitter's leadership changes and sales speculation to blockbuster earnings, we look at the week in tech that was. That is next. This is Bloomberg. Twitter is adding a new advertising tool to its arsenal. The social media network is allowing brands the chance to sponsor its Moments feature. Moments are a collection of theme-centric tweets. Advertisers will also be able to add a cover image to their moment. Twitter CEO Jack Dorsey announced a new feature in a blog post. And we should note, Bloomberg LP operates a global breaking news network on Twitter called TikTok. Sticking with Twitter, the company is still sorting through a massive shakeup at the top, with COO Anthony Noto resigning from the company this week. As part of our recap of the week in tech, we sat down with Bloomberg Technology Selena Wang and our executive editor Tom Giles to ask what Noto's departure from Twitter means for the social media company.
Anthony Noto certainly played a great role in driving the revenue parts of the business. He definitely leaves a big hole at Twitter, but not enough of one that's really going to stop the positive momentum that the company's in now. Now, we know that user growth and advertiser growth are starting to rejuvenate on the platform, and his leaving isn't going to stop that. However, it does leave a lot of questions about the future of the company, especially the fact that Jack Dorsey is, in fact, the CEO of two companies at the exact same time, Square and Twitter. Having a COO was seen to be a big reason because they did have a dual-time CEO. And without him, that leaves into question what's going to happen to the company and how the board plans to fill that.
Jack did tweet the day that he left, "I'm really sad to see Anthony Noto leave us, but I'm happy for him and really proud of everything he's accomplished at Twitter. He's been a friend, partner, and mentor to me for years. He always has my support and gratitude. Thank you, Anthony. We love you." Overflowing with gratitude and love there. Tom, same time, we're now hearing chatter about Salesforce potentially acquiring Twitter. What are we hearing? What does it mean?
You'll remember that Salesforce looked at Twitter last year, walked away, Price, Disney looked, several companies were
Lots of companies
were looking at Twitter. So the chatter has found its way back into the market. We saw a little bit of a lift in the Twitter stock today. Also got a little bit of an extra fillip from research by Citron, which said that there's a lot of growth in store for Twitter. So a lot of bullishness around there. We at this point have found no reason for substantiation of the Salesforce Twitter speculation. We're going to stay on it. We're going to be talking to everyone we can around it. But so far, not spending a lot of time wasting.
You've been making calls, I know, all day, Selena.
The big question is what's changed from 2 years ago. As Tom said, they walked away. The shareholders decided it wasn't a good place for them to put their money in a declining asset and one that wasn't part of its core business. Now, 2 years later, they've addressed many of those concerns. Many people don't see it as a declining asset anymore. User growth is coming back. Advertisers are coming back. But they still have a big question around abuse and harassment, which arguably has gotten worse over the past year, especially over concerns of Russian manipulation. There's no substantiated claims right now, but because Twitter has no controlling shareholders, if someone does put a price that can't really be said no to, then shareholders and the board obviously have to consider that.
Meantime, Netflix and Intel both reported earnings this week. Netflix healthy subscribers growth, the stock soaring. Intel also strong earnings despite this massive chip flaw that has been such a headache for them and the entire tech industry. Really, what are the highlights?
We came in a little bit concerned about what Intel was going to say and what their forecast was going to include because this chip flaw was disclosed in early January. The question is, how much of an impact would it have? And is the fix, we've heard about these companies that have applied the fix, and it's like shutting down their servers, and it's making their servers, not function as well. That said, Intel has been saying from the start that it doesn't expect a material impact from the chip flaw that was revealed, and that was borne out in the results today. So you've seen the stock hit a 17-year high, a lot of relief, upbeat sales for the last quarter, really a reflection of demand for their server chips, right? This is not the PC chips, this is the server chips, these real powerful chips that are running all of our servers. So a lot of optimism and a lot of relief.
Facebook, Amazon, Apple earnings coming up next week. Selena, what are we watching with Facebook?
Facebook, the big question is Zuckerberg has so far shown he's really willing to take a big cost up front to sort of drive the long-term growth of the platform. Now, last quarter, he said they were going to have massive increases to address these problems of security, intelligence, also content, AR, VR. His goal this year is to fix Facebook, so he will spend whatever it takes to do that. But that does probably mean a short-term loss in margins. Now, the question also is how this newsfeed change is going to impact ad revenue in the short term. Remember, they said they were going to deprioritize content from businesses and brands and prioritize stuff from friends and family. But that being said, Facebook has a lot of different levers it can pull. So investors will be watching for how Instagram growth, how that monetization is going. They also have Messenger and also WhatsApp, which is in the very early days of monetization. So there's a lot of positive places for investors to look, even though they're going to be spending aggressively this year.
And Tom, with Apple and Amazon, obviously two companies where the holiday quarter is really important. We're going to be looking at that iPhone number to see how the iPhone 10, the 8 and 8 Plus did. What are you looking at?
That's the question of the hour, is how much demand was there? We've gotten so many mixed reports from overseas about demand for the iPhone X. Was it as robust as people had hoped? The sense is maybe not so much. We're still going to see some healthy growth at Apple, no question about it. Did it live up to the hype? Remember, you've got these Chinese competitors in China, Oppo, Vivo, Huawei, that are all putting out really formidable phones and are taking share away from the likes of Apple and Samsung. And so how much of an inroad did they make in the holiday quarter? Again, we think there's going to be good growth, but does it live up to the hype? And that's the question that everybody's asking for Apple.
And that was the Week in Tech with Bloomberg's Selena Wang and Tom Giles. Well, as we were just discussing, we have a slew of big tech earnings next week. You'll find full coverage and analysis as we get results from Facebook, Apple, Amazon, and Alphabet. That does it for this edition of Bloomberg Tech. A reminder, we're live streaming on Twitter. Check us out at Technology weekdays, 5 p.m. in New York, 2 p.m. in San Francisco. That is all for now. This is Bloomberg.